Strong GDP growth surprises economists. The U.S. economy grew at a robust 3% annualized rate in Q2 2025, beating the expected 2.3% and rebounding from a 0.5% contraction in Q1. This growth was driven by resilient consumer spending and a steep decline in imports, despite ongoing trade tensions and high interest rates. Consumers and trade drive growth. Consumer spending rose 1.4%, ouncing back from a weaker Q1. Imports fell sharply by 30.3%, as companies had stockpiled goods earlier in the year ahead of new tariffs. This drop in imports significantly boosted GDP, despite exports dipping 1.8%. Housing and government spending drag. Residential investment declined 4.6%, reflecting continued housing market weakness due to high mortgage rates. Federal government spending also fell by 3.7%, adding no support to economic growth, though state and local spending increased modestly. Tariffs, a mixed economic signal. President Trump's Liberation Day tariff policy has reshaped trade dynamics. While critics feared a recession, the drop in imports actually lifted Q2 GDP. However, export activity weakened and uncertainty around trade remains a concern. Inflation slows, but still lingers. Inflation pressures have eased slightly. The PCE price index rose 2.1%, and core PCE came in at 2.5%, both lower than Q1 levels. However, inflation remains above the Fed's comfort zone, limiting the case for immediate rate cuts. Trump pushes Fed for rate cuts. After the GDP report, Trump urged the Federal Reserve to cut interest rates, arguing inflation is no longer a threat. However, the Fed is expected to hold rates steady at 4.25% to 4.50% as it waits for more definitive inflation control. Caution under the surface. Despite the headline growth, deeper indicators like final sales to private domestic purchasers rose just 1.2%, signaling weaker demand. Housing remains a soft spot, and overall consumer spending is still below past highs. Bottom line, strong but fragile. The economy showed strength in Q2, but vulnerabilities persist, with inflation not fully tamed and trade policy evolving. Future growth will depend heavily on Fed actions and how global trade tensions unfold heading into the 2025 election.